Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This edition of Macro Mondays is being recorded on the late evening of Sunday, July 27, 2025. Thank you so much for tuning in. Hope you all had a great weekend. And in today's edition of Macro Mondays, I want to keep it really simple. I want to discuss why gold, silver, and hard assets, commodities, are poised for upside that's going to continue at least for another decade, well into the 2030s. And it's quite simple, and I'm going to get to that. Let's look at some charts. So here we have the stock market here, the S&P 500, gold stocks, the Barron's Gold Mining Index, silver here, gold here. Now, this is an old chart, if you can see right here. This is October 2024, so it is 9 months old or so, but that's not really relevant for the purpose of this video. What I am getting at here, and this is something I've talked about in past videos for years and years, is there is a distinct cycle with respect to the secular trends between asset classes. And it's most distinct with respect to the stock market, gold, silver, and commodities, where usually, or I should say usually, where if one is in a secular bull, the other's in a secular bear. Now, there is overlap. We're seeing overlap right now. We also saw overlap in the 1960s. So there are some instances where you can see some overlap. But the larger point is the stock market is still in a secular bull market. So a secular bear hasn't even begun yet. And so we can see when it hit that secular peak, the other three peaks, 1929, 1968, the end of 1968, and 2000, that after that, there were years and years of upside in gold, silver, and commodities. Now, things are a little different in the 30s, but you had this peak in 29, and the gold stocks had this huge move here, where they had a really good 7 or 8 years, spectacular 7 or 8 years. And we all know the 1960s, which I talk about so often, this peak in 68, gold and silver, of course, had these huge moves after that in the 70s. And with respect to what's going on here and now, and I've said it many a time, this is really the best comparison. Gold's breakout a year ago was similar to the breakout in the gold stocks in the mid-1960s for various reasons. Given the secular bear in bonds, it began in 1965. That also began several years ago. That's similar, but also because you couldn't buy gold in this day. So gold today and the gold ETFs, which are so popular, that's what gold stocks were in the 1960s. But back to the secular peaks in the stock market. So I mentioned 29 and what happened to gold stocks after that. And of course, this one and the decade of the 70s for gold and silver and gold stocks, which continued after the 60s all the way until 1980. This was a 20-year bull market, people. 20 years. And so back to this 2000 peak, then you had, again, another decade here of gold and silver outperformance. So the reality is, after the secular peak in the stock market, you're looking at roughly another decade of strong performance for gold, silver, and hard assets. Now let's talk about that with respect to the 60-40 portfolio. So here we can see the S&P 500. I did mark the secular peaks in red, again, 29, 68, 2000. And then the blue shows when gold against the 60-40 began its confirmation breakout move, confirmation of a new secular bull. So yes, that happened earlier this year, breaking out of this 10-year base. Significant, hugely so, just beautiful breakout. Then we had the breakout move that began at the end of 2001 here. That's what these blue lines are, by the way. For gold, we had it at the very end of 71, early 72. But I put this here because if we're looking at the gold stocks against the 60-40, that breakout really began in 1965. That's when things really shifted in favor of the gold stocks. But as I've said in a few other videos, the stock market continued higher for another 3 years after that. And that's what's happening here and now. We had the breakout here, gold in the 60-40 a year ago. We had gold breaking out of the 13-year cup and handle. Again, I mentioned that this is similar to the gold stock's nominal breakout in 1964, which I mentioned in the last slide. But you have this breakout here, and then this breakout here. Stock market, even after that, made a higher high, corrected, tested the 40-month moving average. It still made another higher high. So this is an ongoing secular bull in the stock market. So that's not the best thing for gold and silver right now, but from a bird's eye view, it's a good thing because it tells us the secular bull market in hard assets has barely even started. We're in the first or second inning. We're not in the middle of it. It's barely even started. Okay, so this is from Jurian Timmer on Twitter, a bigwig at Fidelity. Really like the work that he does because he's not a perma bull. He's not afraid to mention a secular bear market. Every other guy on Wall Street, they'll never mention that they'll just never mention it, period. So what he did here is he's looking at past bull markets. He's looking at real total return. So it's the S&P plus dividends divided by inflation. That's real total return. And so he has the various analogs started at the 2009 low. So let's see, where's the 21? These, as you know, I'm colorblind. These colors are difficult for me. I don't see where the 21-29 one is. So that peaked after 8 years. So I guess maybe that's right here. That's where the 20. So, but let's focus on the other two. So you have the 49 to 68, 82 to 2000. So those peaks are in 2026. If this market follows the exact same pattern, 2026. And then you have a peak here, which he did not label, which is in 2027. So we'll see. Maybe the secular bull will continue for another year. Maybe it peaks sometime next year, maybe in 27, maybe even 28. But we can see here it's definitely long in the tooth. And at some point, you're going to see the end of the secular bull. And then at that point, you can project forward. Okay, then the secular bull on hard assets. Does it have another 11 years left from that point? 8 years, 13 years, 9 years? Nobody can predict that. But my point is, we're probably likely to see a peak in 2026, maybe 2027. You project that forward, you're minimum 2035. So this move that we're all enjoying, it has a really, really long way to run. And just to add on top of that, here's a chart of copper. We've talked about the breakout in gold, the breakout from the 13-year cup and handle pattern last year, super bullish, a breakout of a 13-year pattern. That's super bullish for the next decade, not just 2 or 3 or 4 years. And copper has made a very similar breakout. We can see her here from this base. This is a massive base. Now, copper, this was also a massive base back here in 2004, 2005, had this huge breakout move. But what happened? It basically went straight up in 1 year. This thing almost tripled. It went from, it was trading in the $1, $1.25, this almost hit $5. This was a massive quick move because there's a big supply demand element to copper. That's why it didn't progress that much after that. So if the same thing happened and it tripled, it would shoot up like this to the high teens. And then you'd get the same thing like that. But maybe this time it's more likely to move like that. But the larger point is, this is broken out of a huge base. This is super bullish technically. And this is going to run well into the next decade, much like gold. And the same thing will happen for silver, probably next year when it breaks 50 or the year after that. So all these breakouts, all these things are telling us that this bull market in hard assets has a long, long way to run. Last chart here, I have mentioned gold against the CPI, the inflation adjusted chart of gold. You can see here, super bullish breakout from a 45-year base. Oh, and by the way, copper against the CPI, that is looking, could be setting up for 74. Wow. That's a 51-year breakout if this thing keeps going. So you know from my past videos how this is a great indicator for the gold stocks, fundamental and technical indicator. So this massive breakout, this is super bullish for gold stocks over the coming years. And this breakout that's coming, that's going to be super, super bullish for the copper stocks. So bottom line, put it all together, people. Gold, silver, and hard assets, they're going to run well into the 2030s. And I know there's some people who think we're going to have this huge blow-off move in gold in the next 2 or 3 years. And look, it's possible. We could get that. But if that happens, that's just the first phase of the secular bull market. Like, gold is not going to peak out at like $7,000, $8,000, $10,000 an ounce. This is going to run well into the 2030s. But what's coming in the next couple of years is really, really exciting. Thank you so much for tuning in. Appreciate your support and your viewership. Leave a comment. Let me know what you think. Hope you all had a great weekend. And I'll talk to you guys again in the next video.